another CEO came in and said, I invest in all my in insurance plans. Like, wow, I was thinking, wow, this guy invests in insurance plans. I thought insurance was for protection, not for investment, right? Fundamentally, it basically is this. The motto is, buy term and invest the rest. And what we want to do is just make sure that, you buy protection for protection's sake. It's most cost efficient, it's unbundled, it's simple. It's, here's $1 million for 99 ringgit a month for a 30-year-old woman non-smoker. You get 1 million ringgit in coverage, whatever happens to you. And then the investment and stuff like that, you can save all the premium that you have saved from just buying term and invest that, right? So we're talking about, for example, there's immense flexibility. So say you have, you spend 3,000 ringgit a year. Normally you would have put into an investment linked plan. What you can do, just I'm going to spend 1,000 ringgit a year on my protection to get that sort of million ringgit policy, and the other 1,008, 2,000 I will just use that to invest the rest. Whereas I think what happens in the traditional sense, if you talk about investment linked plans, this is fixed. It's a 30-year commitment, and then you cannot change your investment. This is a fixed amount, and you are limited to these sort of funds offered by the insurance company and so on. Whereas a lot of insurance companies are trying to bundle these things together. We are trying to unbundle it because there's a lot of cost that you save if you unbundle it. It's not like, it's not like if you bundle it, the cost is cheaper. Actually, the cost is more expensive. And I think that's fundamentally it. Buy term and invest the rest. But the craziest thing about this is that if you look at that bit I've circled here, unallocated premium, unallocated premium means things that don't go towards your funds. These are things that are paid to distributors, commissions that are paid to distributors like life insurance agents, and even to Fi.Life, for example. To be fair, right? We are also agents to a certain extent. And look at it. Out of, say, for example, you pay 300 every month, it's 3,600 every year. 59% to 60% of it is given in the first year is given to intermediaries, right? And that's crazy. Why should you pay 60% of what you intend to invest into for intermediaries, right? And that's nuts. That means it kills your returns completely. Now, let's change the motto to buy term, buy the most cost-efficient thing, buy term, and invest the rest. Look at the blue. The blue in the first 6 years is definitely higher than the one for investment link, simply because your intermediary costs are lower. All you're paying is just fees or commissions to intermediaries that are involved in the insurance part, right? Mm-hmm. The investment part you're paying zero because you're investing it yourself, right? And these days with companies like robo-advisors and all that, actually, what the costs are? How much does it cost to open up an account with robo-advisors? Zero. How much does it cost for them to manage your money? 0.6, 0.8% per annum, right? What do you want to buy for your children? Or you don't want to buy them a life insurance. Whose life are they? They have no dependents, right? Mm-hmm. You have a dependent. It is them. So basically, you should buy on your life in case something happens to you. If your child, touch wood, you buy life protection for your child, if something happens to them, you get money, and for what, right? There's no value to the money in a sense, because it's the grief that you are experiencing. You're not experiencing a financial decline because your child has passed away, right? Yeah. What you want to do though for your child is a different kind of policy, a different kind of protection policy. It is your personal accident policy, is your medical hospitalization policy. Yeah. And although it's hard to get, I think you basically, those are the two main policies you need for a child.